Let's talk Greece. I have with the economists earlier in the show. But how do you see this as a market player unfolding? Are you concerned about the 8.5 billion euros they need to service by the 16th of May? We're seeing spreads continue to widen at all-time highs. And then you've also got the contagion. Portugal's spreads are starting to be impacted. And
Spain is next. Yeah, it's certainly, I think it is a big deal. A lot of people are downplaying it, saying, the economists are saying there's absolutely no way that Greece will default. Eurozone can't afford it, they won't let it. But the bond markets are telling you a very different story. They continue to push those yields out, over 10% this morning, another new high. It just appears like the Greeks are trying to talk this whole crisis down. And the bond markets are literally who's going to win. Bond markets versus the finance ministers at the moment.
And the finance minister, there's a statement that's doing the rounds at the moment.
Yeah, Greece, you're going to lose your shirt if you bet against Greece. But there's a little bet going around, and typically the speculators usually get this one right. I think it is a big deal. I think a lot of people, as I said, have downplayed it. But the contagion is there, as you said. Spreads going on everywhere. It's becoming more and more expensive for these countries to service their debt.
There's not a big enough premium to hold Greek debt at this stage. It looks as though the market is going to demand higher and higher prices for this one.
And it hasn't stopped, yeah. So, I mean, a month or two ago, the rhetoric was going around that the IMF were going to do half. And I don't know if you remember that story. It's all different stories.
45 billion euros and then 80
exactly
billion
bouncing
euros
all these.
Fiscal deficit now.
It's been this ongoing soap opera, but we've still got no clarity and no finalisation yet. And as you said, they have to start refinancing their debt quite soon. This is. I think it is a very, very big deal.
But for a player in South Africa, does it change your view on the trades that you're making?
I think yes, it does. It changes your whole risk appetite for what do you want to bet against and what do you want to bet for. Certainly we're very prone to foreign inflows and foreign outflows from a local JSE point of perspective. The minute that we saw what happened last week Friday with or the week before the Goldman Sachs news broke, as soon as risk aversion popped into play, Rand got weaker, markets dropped, money flows was negative out of the country. And I think whether we like it or not, that we are so part of this global marketplace, and the minute that risk aversion comes in, it's going to have a very negative effect. I think if anything, we've actually been dragged higher every single week by the S&Ps in the American markets. They were up 2% last week. Everyone is looking for
the S&P, and correct me if I'm wrong, it's up 80% since its March 2009 lows.
Correct.
That's got to be a signal.
It's not unusual for a correction that we've had. I mean, we had a massive drop, the biggest drop in 7 decades. Typically, as stimulus and monetary policy gets thrown at it, these markets do bounce back. But I think the speed and the sort of the ferocity of how quickly this market's buying back has caught everyone. I mean, most stocks and most indexes are higher than they were pre-Lehman. Is the world a better place than pre-Lehman? I don't think so. Rates are back down at zero, and there is still a little bit of nervousness out there.
Let's talk about volatility, because I know that's a key indicator for you. And what we're at, about 17 at the moment.
I think it's about 16 actually, Brownwyn.
It's low.
All-time lows, yeah. Well, all-time, certainly the last couple of years.
The last couple, but it did go as low as 8, though.
It has been down. I think historically it's been below 10. But if you factor in that, the world is still a lot of issues out there. Volatility this cheap, I think it also implies that. So
shouldn't you, when you say this cheap, shouldn't you be buying volatility?
People are buying volatility, but the problem is when you just have this constant grind higher. The S&P is moving up 0.5% every day, slowly grinding higher. The cost of holding that risk, that volatility, is expensive. You're going to lose money. So at some point, it's going to be a good bet. But we just feel like, all of us, especially from a trading point of view, we just need some catalyst. We just need give us a push, either up or down. But we need to break out of this grinding higher every day.
On one side, you've got corporate earnings in the US, and it looks as though we're seeing pretty robust earnings on that front. There are some surprises to the negative, and then you've got the Eurozone and the issues unfolding on that front. So it's pretty much as though you're sitting with a scale and you've got two sides of the scale, and which is going to derail economic growth and which is going to ensure that economic growth globally is on a firmer footing.
Yeah, exactly. I couldn't agree with you more. And also, these earnings, as you said, that have been coming through have been very good. Profits are better. I think there's one little bit of uncertainty as the revenue line hasn't been quite as good. You've seen a lot of flat revenues out of the market with increasing profit, which questions.
So it's basically that they're cutting costs instead of boosting top line.
Exactly. And I think that's just one little note of caution. But definitely a tale of two markets. You know, US, as you said, US looks good. Eurozone pending possibly default or bailout. It's a tough market out there.
MTN, let's focus on that. Orascom and the fact that they are looking to buy the Algerian unit of that company. Market seems undecided as to whether we're going to see this go along. MTN underperforming the broader market today. We were down 0.5% with the market. The JSE all share rallying 1 1/3%. Where do you lie on MTN? And we've seen the corporate activity rumours circulating around this company before. Last time it took it all the way to 165.
Yeah, long as we can remember this. I mean, MTN's always in play, supposedly. And it's no secret they've had a bit of a for sale sign above them. I don't think you can go far wrong, Ronald. I mean, at 108, 109 Rand a share, you know, forward Ps are not too demanding. Always the question of how much further can they grow. But I think the market just hates uncertainty, and the problem is with MTN and their management, whoever does this sort of PR, they've had a bit of a disaster over the years. There's never any clarity. Once again, this news was supposedly broke on Thursday or Friday. The market already knew it before they suspended shares in Orascom. So again, another little bit of a PR mishandling. So need more clarity before we make a firm bet on it, but I think MTN at these levels is not a bad buy.
FOMC on Wednesday, all eyes on that front. Are you expecting any changes to the verbiage post a flat decision? I can't see we're going to see any interest rate decision.
No, but I think it's a biggie. I think it's getting, you know, month after month, the odds are getting greater. At some point, stimulus is going to have to be withdrawn. And I've heard you a few times talking intros. I think that's going to be the big deal. And with the numbers that have been coming out, you saw those month-to-month home sales laws that came out on Friday. I mean, I thought it was a mistake when they came across. You know, 26% month-on-month, extraordinary growth, and they cannot keep rates at zero forever.
And you can't keep using the base effect argument, can you?
Absolutely not. And look, there's no doubt about it. It's worked. It's got the economy the fastest recovery in 70-odd years from its lows. But at some point,
that's generally what will happen when you give the impression that money grows on trees, won't it?
Well, that's another argument. But in the meantime, until that rhetoric comes out of the FOMC, you know, stay long.